Good afternoon and welcome to the SHEARWATER Group PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll, and I'd now like to hand you over to Phil Higgins, CEO. Good afternoon, sir.
Thank you, and good morning. Good afternoon to everyone. It's a pleasure to have the opportunity to present to you today interim results. Joining me also for the first time is our new interim CFO, Adam Hurst, who you'll get to hear from later on. Let me start off by giving you a brief overview of the SHEARWATER Group, just to remind you. So at SHEARWATER, we provide cybersecurity, managed security, professional advisory solutions to help create a safer environment for our client organisations and their end users. We deliver this business through two divisions, our services division and our software division. Within our software division, we produce award-winning identity access software and sensitive data discovery software. And we sell that via a global network of 350 plus resellers. Recently, we integrated our GeoLang company into Secure Envoy, and we did that for a number of reasons. One, to gain greater efficiencies of both time and resources, and more importantly, for GeoLang to benefit from the unfettered access of the Secure Envoy's global reseller program. All of the resellers, 350 plus of them, have now been informed, obviously, of the new product set, and they're able now to represent that internationally for us. On the services side of the business, we're made up of Brookfield Solutions and Pentest. This is following the integration of Exena Consulting into Brookfield. Once again, we did this to gain greater efficiencies, but also importantly to note is that we did this to assist our Exena consultants in gaining greater access to our client base, which is made up of Fortune 500, FTSE 350, government and SME clients. Adam will cover it in later. Sorry, Adam, if you go back one moment. Adam will cover the revenues later on in greater detail, but just to give you a little bit of a flavouring, our services division contribute 89% of our group revenues, leaving the remaining 11% coming from our software division. Whilst our software division is a smaller number, don't forget it's our own IP. It's a greater quality of revenue that we see with a greater profit margin. We also see a circa 84% recurring or repeatable revenue coming from our software division. So it's very important to us. And lastly, on scale, we work across circa 50 countries, as you can see there on the map. Adam, if I can take you to the next slide. Thank you. We gave a resilient performance during H1. Our customer engagements do remain robust, resulted in 41 new customers during the period, and that's despite some of the market challenges. We did see client decision-making take a little bit longer than usual, and we also saw some projects getting deferred into the future. And we do expect to see some of that happening potentially as the year runs on. Also, during the period, our revenues came in at 10.5 million. Adjusted EBITDA at 0.6 million. And that gave us a healthy balance sheet with cash of 2.2 million as of the 30th of September. Once again, Adam will go through greater details at the later stage in the presentation. As I mentioned earlier, we have enhanced our operations by taking decisive action to optimise our operations. We wanted to emerge leaner and more of a unified business. Our services division continues to show promise with our encouraging pipeline. We've got high quality blue chip customers and government customers covering both domestic and international territories. Our newly integrated software division can now look forward to enhanced opportunities now that their full portfolio of product set has been successfully introduced right across the global network. We're very pleased with that piece of work. Now finally, we're proud to announce, obviously, we managed to secure 5 significant awards over the period, and 2 are relating to products. One was for quality of service, another one was the vendor one, but most notably was one from our Pentest division. where they successfully hacked for, I believe it's their second or maybe third time, the Samsung S23 phone. They did that on the global stage at Pwn to Own Toronto, and we're very pleased with that result. Moving on to the next slide. Following our recent restructuring, we have become more agile, specialised, and more of a focused business. Our expertise enables us to assist our clients in meeting their regulatory and legal requirements, while safeguarding their assets and their user base. We do this through our advanced solutions and our services. We do excel in operating beyond the high commodity segment of the marketplace. We do avoid the vast swathes of competition. We're not in the commodity space, we're in that high value. They do have longer sales cycles, they are more complex, they are bigger deals, but we do enjoy that opportunity. Also, our commitment to cutting edge technology continues, along with our service offerings. It enables us to create and forge enduring partnerships with our blue chip organisations. We cater for clients across all sectors, spanning both domestic and international markets. Our team has diligently managed and optimised the staff numbers. We do align, and we have aligned and we have right-sized our workforce. With this strategic approach, we're now fully equipped and poised to seize any opportunities that arise out of H2 and the coming months. And finally, take this opportunity to formally welcome Adam Hurt, our new interim CFO and board member. Adam brings a wealth of experience and he strengthens our leadership and finance teams. Later on in the presentation, Adam will be presenting the finance slides to you. Moving on to a little bit of update on our services division. On the right, we have a snapshot of some of our recent achievements. I'll just walk you through a few of those and embellish some of it where I can. After successfully incorporating Xena into Brookfield, we have experienced increased momentum and a greater traction from Xena. We have discovered new business, and the pipeline, I'm glad to say, is looking better than it was. Also, as noted earlier, the majority of our revenue, 89% of that, comes from our services division. I just want to walk you through what the breakdown of that revenue looks like. As you can see, 5% originates from new contract from new customers. So these are net new customers to us, people that we've never spoken to before, they're new to the group. 54% is coming from repeat business and renewals. So where we sold something previously, maybe a year, 2 years or 3 years ago, where the contracts come up for renewal, we're fortunate enough to be actually winning that back. The interesting one for us is the 41%, which is generated through new contracts with existing clients. This also includes the clients where they have purchased from us, say, 100 user infrastructure, and then in year one, and then coming back to renew that, but then extending it, making it bigger. And obviously that gives us a good demonstration of the deeper, wider penetration that we're having inside our client base. So we're looking for that number to grow on a continuous basis. If you look at where we actually do a lot of this work, we're particularly strong in the banking, telecommunications, and technology sectors. Obviously, with the technology sectors, that's a testament to the quality our own industry see in our ability by acquiring our products and services. Notable wins during the period. We've had a number, but just a few highlights here. We got a significant contract win with a leading British mobile operator. We're fortunate enough to win an international contract with a European MSSP. We also won significant business from an international health and beauty retailer and pharmacy company, just to name but a few. One particular one that I am very pleased with is historically we've stayed away from the government portals. We did find the government business very slow. We did find the decision-making process very complicated and tiresome. But I'm very pleased to report, after joining the G-Cloud platform, we've managed to secure our first significant government contract from a government department. This gives us an opportunity, obviously, to tap previously untapped sector for us. So we'll be looking to expand that, and there are a number of opportunities in the pipeline to do so. Our pipeline continues to build. We got some wonderful opportunities in there, and part of our focus for the remaining part of this fiscal year is obviously to convert those opportunities into bottom line revenues. And all of this, our group, is underpinned by years' experience, a very strong client relationship, a breadth of offering, staff incentives, and of course our advisory board support. We'll just take on to our software now. Just to give you a little bit of colour around what we're doing there. So as I mentioned earlier, we've been streamlining the business. We integrated GeoLang into Secure Envoy and the GeoLang technology set. The Secure Envoy guys have been working on the GeoLang technology now for over 18 months. And I'm glad to be able to say that we have now got and we've created the Secure Envoy data discovery solution. And this is the merger of that technology coming into Secure Envoy. To update you on the progress we've made since the integration, I'm pleased to report that the team are now operating as one cohesive and consolidated unit. So we're leveraging their collective expertise to deliver heightened capabilities and to explore new opportunities inside the technology sector. The all-new data discovery opportunities are strategically channeled now, obviously coming through our Secure Envoy 350 plus reseller network. As we're already seeing some of those opportunities come through. It's still very early. They're coming from literally international spread of resellers. Also, I'd like to just update you on the converged access management development. Obviously, this is the core product of Secure Envoy. We have now recently released our version 3, release 3, that came out in October. And what that does, it gives more features and functionalities for the client. It provides an expandable deployment options. So now, not only can you install this on-prem and in the cloud, we've also got additional software platforms in which you can install this across. It's worth noting that many of these options are not available from our competition. So this is what starts making us stand out from the crowd. The Secure Envoy came from an on-premise environment. We still have a large number of customers who still deploy with inside an on-prem. So we're still servicing those, we're still developing our software with those, but we also have developed obviously our cloud versions. So we can meet the old marketplace and we can also address the new. We've also, with inside the access management, we have introduced a managed service provider version. This allows the managed service provider to white label. They can remove our logo, put their own logo on. We've also integrated a smoother, better billing system. So as the demand for managed services grows, it allows the MSP provider to manage the billing of their client accordingly. And whilst we're yet to see the benefits of some of the new software releases, what we are seeing is we've seen renewals tracking currently ahead of management expectations, which is very encouraging for us. And finally, I suppose, just to confirm and make additional commitments, all of this is underpinned by a continuous investment with inside software development, and we will continue to do so. And with that, I think I'm now handing over to Adam. So Adam, over to you, please.
Thank you, Phil. Hi, everyone. It's good to be here. And as most of you will know, I've now been with Shearwater for almost 8 weeks. And before I start, I did want to take the opportunity to thank my predecessor, Paul McFadden, for his really professional assistance during the transition period. So I'm going to walk you through the main financial headlines from our half-year results, and obviously we'll be happy to take questions later. So as you heard from Phil, our revenue in the first half of £10.5 million was slightly below the equivalent number in the previous year. This was due to a small improvement in the services business, but lower revenue in the software division, which I'll come to shortly. Headline gross profit increased by £0.5 million or 16%, although some of you will recall that in the first half last year, the company was impacted by a £0.9 million foreign exchange loss due to the political volatility and turbulence in the markets in the UK at that time. Those exposures were subsequently hedged, but excluding the FX loss from last year's numbers would show that gross profit declined by £0.4 million this year, and this was due mainly to the weighting of revenue between our two divisions. Admin expenses were broadly flat year on year, with savings in the divisions offset by slightly increased costs at corporate. Consequently, adjusted EBITDA was better than last year, although if the impact of FX is removed, then that would have been behind due to the lower gross profit. And just to flag, building on some of the points that Phil raised earlier, we continue to retain a long-standing customer base within our revenue numbers. So moving into the divisions, I'll start with services, which comprises Brookcourt, Pentest, and the newly integrated Exena business. Revenue in the first half was encouraging, with a 2% increase year on year. This was driven by a strong start in the penetration testing business, which included fulfillment of a contract delayed from last year, but underlying trading also performed ahead of our expectations. It was the services division that was impacted by the FX loss I mentioned earlier last year. So while our headline gross profit increased to £2.3 million, the prior year comparative would have been £2.5 million if we adjusted for it, with a margin percentage of 27%. The slight drop in the underlying gross margin percentage was due to the profile of contracts in the first half. Admin expenses were lower than last year, due mainly to cost savings achieved as part of the restructuring that was mentioned in our year-end results and that Phil talked about earlier. The software division had a slower first half. While it's pleasing to note that renewal rates improved compared to last year, ahead of management's expectations, new business was lower than expected. Sales opportunities for the GeoLang product, now renamed Data Discovery, have, however, increased significantly as the recent integration has created access to Secure Envoy's 350-strong global reseller market. The gross margin percentage remained steady, while admin expenses were slightly lower. The remainder of the income statement is broadly in line with last year. Software amortization increased slightly as products in development were released to the market, and the exceptional item of £0.2 million related to the integrations of Exena into Brookcourt and GeoLang into Secure Envoy. The tax credit increased slightly due to the phasing of recognition of R&D enhanced tax relief last year, as well as an increase in the UK corporation tax rate from 19% to 25%. The reported loss after tax improved by £0.4 million compared to last year, although excluding the impact of the FX loss would have been £0.5 million behind. Finally, moving on to the cash flow, and again, there are no significant surprises. Overall, our closing cash balance of £2.2 million was £1.3 million better than at the same point last year, although we did flag at the time that approximately £1 million of cash receipts had just tripped into October. You can see that the main reason for the reduction in cash since the year end, which sat at just under £4 million, was due to an expected seasonal outflow in working capital, which is consistent with recent years. And I've prepared a simple chart showing this impact. On the left-hand chart, you can see here the seasonality in the cash position of the business over recent half years. And on the right-hand side, I've extracted the half-on-half movements. These show clearly how cash generation has historically been weighted to the second half of the year. And you'll also note that even after adjusting for the £1 million that tripped into October last year, the outflow in the first half this year at 1.8 million was relatively low compared to the first half in FY22 and in FY23. So to finish off the remaining cash movements, you can see that we spent slightly less capex in the first half this year, and that was due mainly to bringing some expensive overseas outsourced resource in-house in the UK. And we also received £0.3 million repayment of tax after we finalised the FY22 tax returns. And that's all from me, and I'll hand back to Phil to close out the presentation.
Thank you, Adam. We can just move on to the next slide. I'm just going to give you a little bit of direction on our strategy. And as you'll see there, the key pillars on the left-hand side still remain. They're unchanged. And whilst they're there, it's important to note that we are a client-centric market consolidator. We're focused on building an organic, sustainable revenues and profit growth for the years ahead. And we will achieve our organic growth through helping our companies solve core scaling issues by providing capital and product services and development when's required. Also to help provide with infrastructure and skilled experience management personnel, along with the board advisors. All of these things actually help create scale for our clients, and as demonstrated with integrating of GeoLang into Secure Envoy. We also aim to build upon the cross-selling success that we started back in 2019. We also very much focus on selling our own software. The revenue stream is better quality, higher grade, and obviously has a huge impact on the bottom line. So we're incentivizing our sales team to make sure that we're selling our own in-house services and software. We also intend to continue, obviously, to secure new long-term, high-value customers. We deal with the Fortune 500, FTSE 350, as well as SMEs and government. But our long-standing customers, some of those have been with us for in excess of 10 years. And we're very proud of that. And these are blue chip names. These are companies that you would know the logos of. Also, we continue to, we've made a commitment to continually to innovate, and we will continue our investment through R&D into our software and our services. However, it is also our long-term goal to grow via focus acquisitions. We'll be looking for companies that will complement be it our services or our software division that can bring shareholders value, and that will be the key focus of any acquisition moving forward. If I go to the next slide, please. So just to give you a little bit of the outlook, the current trading landscape, our engagement levels remain high despite the challenges that we've seen recently. Our recent operational adjustments have not only fortified our strategy and our strategic positioning, but they've also paved the way for enhanced resilience. The presence of the promising pipeline and our service opportunities gives us a source of confidence. We still have obviously some historical contracts to fulfill, and we do anticipate seeing those deals being secured later in the year. We also look forward to leveraging our extensive reach, our global distribution network of those 350 plus resellers. We'll be working very closely with them to help drive our software products and our sales through them. We have the opportunity to thrive. We've got a dedicated focus in pushing high margin deals inside the division. And amidst these dynamics, we have our unwavering commitment to maintaining a healthy balance sheet, and very pleased that Adam's on board, and even though he's been with us a very short period of time, he's managed to get a grip and get a clear understanding of the inner workings of our group. And we make a continuous commitment to maintaining a healthy balance sheet. Our opportunities, there are several opportunities on the horizon for us when you think about it. Firstly, there's the potential of further expansion of our blue chip client base within inside the services division, and in particular focusing on the increase of the proportion of revenue generated through recurring sources. We're looking to go deeper and wider, and we're also looking to obviously convert our opportunities that we see in the pipeline into bottom line revenues. Additionally, we can capitalize on the enhanced offerings that we've got. We develop in-house services as well as in-house software, and we're looking obviously to capitalize on those, push those deeper and wider across our client base, and also with proactive marketing to look towards winning net new customers through that route. Furthermore, there's room for growth by introducing our software products through to our existing blue chip clients. We have been doing this. We've got some good conversations taking place at the moment, and we're very pleased now that we've got the full product set available, that we're able to actually do this, and we will look for opportunities to get converted later in the year. We're also looking for the strategic initiatives really to position us well to optimize our market presence and obviously drive that sustained growth that we talk about for our organic. And we'll be looking to do that with both our software and our services side of the business. And with that concludes today's presentation. And with that, I'd like to hand back to Control for some questions.
Perfect, Phil. Adam, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. We have received a number of questions from investors, and I want to start off the Q&A session with this one here, which reads as follows. Good to see high-profile wins in the services division. What other types of contracts are you securing, and are they moving to 1-year or still 3-year contracts?
Good question. Right, so we do have a healthy blend of contracts now across our order book. We've got a good mix of 1-year deals with larger customers signing 1 to 3-year deals. We also have some high-profile wins, which is where we have an encouraging rate for renewals from our existing clients as well. So it's really mixed, but it is blend. There is a blend, and it's very healthy, and it's well balanced for us now, better than what we were experiencing in previous years.
Perfect. Thank you very much, Phil. Just moving to the next question. Why is it taking so long for companies to invest in what most see as an essential service with so many cyber attacks?
I think there's a couple of things at play here. I mean, what we have seen is obviously, due to the economical pressures out there, budgets have been under pressure from some of our clients. And this is across all areas. It's not one particular vertical that we're seeing this. So part of it is economical climate. While cybersecurity remains high on the agenda of our customers, constantly in the press, as we all know, customers are also taking slightly longer in their decisions. Some of the projects are getting deferred to the future, and so we have to wait for those customers to initiate and to start that engagement. Unfortunately, you can't push some of these global operations any quicker than we do, as much as we'd like to. But unfortunately, yeah, due to some of those economical pressures on our client base, they are delayed.
Perfect. Thank you very much. The next question here. Can you tell us more about the reorganization of the business and other benefits expected to deliver in H2?
Yes, so I will. I'll probably ask Adam to help me on part of this, to talk about some of the finance side of things. But with Geolang, now we've successfully integrated Geolang into Secure Envoy and Xena into Brookfield. We're now right-sized to capitalise on that long-term growth of the opportunities we're seeing. Within one of the things inside Brookfield, for example, we've enlisted our inaugural commission-only sales representative. This is something we're piloting. We're trying. If it works, we will continue and expand it. So we don't have the heavy cost of sales, not until they actually sell something. So obviously, it's a new opportunity for us. Obviously, with our 350 strong global reseller network, as I mentioned earlier, it's the big opportunity there now for Geolang to get their message out on the international stage. And I think maybe Adam, if you can maybe give a little bit of colour around any of the savings that we see.
Yeah, sure. Thanks, Phil. So we, I think if you recall, in our annual accounts to March 23, Paul had flagged that we expected to take out around about £1 million worth of fixed cost from the cost base. And the actions to do that have largely been completed during the first half. So the impact of that will start to come through in the second half this year and then get annualised next year. I think it's probably fair to say that we have reinvested a little bit of that, and we've also obviously had cost pressures as alongside everybody else. So I'm not sure we won't quite get the full £1 million going to our bottom line, but the actions have all now been taken, and yes, those savings are starting to come through.
Thank you.
Perfect. Thank you very much. Could you give us a flavour of the type of customers you're engaging with in the current year?
Yeah, we've got a broad set of multinational blue chip organisations. They span a range of business sectors, including FTSE 350, Fortune 500, government and SMEs. And they're international and domestic. It's a wide range of all sorts.
Thank you very much, Phil. The next question. Macroeconomic factors have again been noted as a driver for struggling performance. Although this aligns to the wider IT services market, cybersecurity continues to be more resilient with continued growth. Why is Shearwater not able to replicate this level of market growth?
Tough question. There's many things that you can point to on this. You mentioned earlier already that cybersecurity, we all know, remains high on our customers' agenda. It does continue to do well. However, our customers are very transparent with us, and we have been impacted by their hesitancy amongst our customers. The wider economical climate has had an impact, and this is more of a matter of timing of when these contracts will actually happen. The customers are there, the contracts are there. It's a timing as to when will they invest in cyber. Obviously, with more pressure coming from regulators and government, that will help contribute to speeding some of these up. But we're as keen as that to happen as anyone. We also see things like customer engagement has remained robust in the first half of the year, which is very encouraging. It gave us an awful lot of confidence. We've got our enhanced offerings following the recent operation enhancements made. So now that we've got those out there, we will expect to see some return on that coming through throughout the remainder of the year and into the future. And of course, we've got a pipeline. The pipeline is a very rich pipeline of opportunities and goes across each division. And now we've got a firm foundation which to deliver a solid, sustainable revenues and profit growth in the years ahead. So we're very encouraged by that. Hopefully that answers your question. I don't think there's anything more I can add to that one.
Perfect. Thank you very much. Another question here. Trading after adjustment for FedEx issue is worsening year on year. Are there real opportunities to turn this business around, or is it going to be a long haul slog to get any improvements in earnings?
I don't think I can really sort of comment on where the future earnings will be. It's true that it was a difficult year last year, as you know. But the opportunities are there. We are seeing that pipeline grow. With the types of businesses we get involved with, we're not in the general maze of the general research space. We tend to deal with the higher value propositions. They do have longer sales cycles. Our top clients have stayed with us all the way through this period, and we're winning new clients coming in. So I can't really give you a timeline on any of that. What I can say is there is all the materials there for the company to be successful. Our focus in H2 is conversion of these opportunities, as well as obviously winning new clients. So the company's been right-sized and we have the right people in the right place, hopefully doing the right things. And I think that will actually help generate that success coming through. But I really can't go into anything more than that at this stage, I don't think. Maybe we can address that question also in writing.
Perfect, that's great. And one final question here. You didn't inform the market of the recent £1.3 million government contract win by way of separate RNS. Why was this? As one of the reasons for the share price is the lack of contract wins renewal information, and they suggest that it would give them reassurance if you're making progress.
I think there's a couple of things we suffer from. When you look at our client fiscal year ends, a lot of our banking sector will be calendar year. A lot of our enterprise are 31st of March. And so this is why we get a lot of H2 heaviness. What we're always hesitant about is announcing a great win, and boy, do we want to announce those wins. But what we don't want to do is announce the wins around the period of when we've got our interim results coming out. We don't want to mislead the market. We believe and we have a responsibility for being transparent. And where there's the opportunities to make an announcement, we certainly will. We do suffer the same problem, obviously, in Q4, and where we do get an awful lot of opportunities coming available to us then. If they come through early in the month, And if we're not knowing where we're going to be towards the end of the fiscal year, what we don't want to be doing is making big announcements and setting expectations. So it is very difficult for us when it comes to making those announcements. We use these opportunities like our interims and our half year to make as many announcements as we possibly can. Wherever we can, we will make more RNS announcements if at all possible. I don't think there's anything more we can add to that. So, Adam, is there any view from yourself?
Sorry, playing with my microphone. No, sorry, Phil, nothing to add.
Perfect. Phil, Adam, thank you very much. I think you've actually addressed all the questions from investors, and of course the company can review all the questions submitted today and publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Phil, could I just ask you for a few closing comments?
Certainly. Thank you. Well, firstly, thank you very much for joining us today. What I would like to say is, obviously, when you look at Shearwater, this year we've had a healthy start to the year in that the pipeline is growing. The opportunities are there. We've now integrated parts of the company to make it more efficient. We've got a pipeline to focus on during H2 and into the future, and we look to deliver that. And we've got a cautious confidence in being able to achieve and reach our fiscal year-end numbers. And with that, I would just like to thank you for taking the time to listen to us today.
Perfect. Phil, Adam, thank you once again for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will then take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Shearwater Group PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.
Thank you.